So we're calling a 10x basically, just under. It was a 10x yesterday. Sorry, it's not a 10x anymore. It's a 9.75x. That's how things are. But we think that's going to be a very, very good move, and price will fix the fact that some of his mines that he acquired had high costs of extraction. And in due course, the fact that he has those silver ounces in the ground, and the valuations are going up as much as they are, certainly going to hold him in good stead. So I'll leave you with that as a miner as well on top of the silver. But happy $60 day to everyone watching this, and hit the like on Danny's channel, because he's kept you alert and awake and watching the most important market and the best performing market of the year. So well done to you too, Dan. With every move up in silver, I find I'm actually getting stronger. I was, shoulder pressing about $5,000 a month or so ago, and now I'm managing just as easily $6,000. So, I'm clearly getting stronger with the silver. That's all I can say. I'm loving it. I'm loving it. I'm loving it. I'm expecting, actually, you might need a bigger camera or zoom out lens. I'm expecting I'll be shoulder pressing $7,000 in the not too distant future. And you guys all better watch out when it starts hitting the triple digits, because I'm going to be so hench. You're all going to be running scared. Well, we had another continuation pattern. Even I was underestimating its power. You know us for HVF method. Let's just look at what happened. So we'll do a quick jump. It would be an absolute fail not to jump to the charts on a great day like this. So let's do it nice and early so that everyone can enjoy it. That's your daily chart. But on a smaller time frame here.
Oh, I don't see it, by the way. If you want to share.
Hopefully it's showing share screen. There we go. One more time. Let's do that again. Sorry, it wanted permission. Oh. That's your little continuation pattern. Yeah. It was staring me in the face, and damn well all but missed it. Beautiful little upside HVF, and you're breaking higher. We keep getting continuation patterns. In other words, sideways movements, rather than being correct, are kind of corrective. It's like a pullback without going down meaningfully. This was essentially a pullback, and what you're doing is there you are trading 60.712. I would tactically right this very second, not wailing right here. I think it's moved well for today, but in terms of the general move tomorrow, the week ahead, I'm seeing further upside. If you recall, we said 91 is going to be our first point where I think you could stall a little bit for a short while. As we start approaching the foothills of
triple digits.
Yes, I think that's it. I've still got my particular broker on, so we've been live trading. That's so there were some P&Ls in there, but we really trade. Our community members are at all-time highs. We've been aggressively. I've been telling them this is the trade of the year. It is the biggest performer of the year, silver and gold. I would include platinum in that. It wasn't counted. It's a very small market, platinum. Those are the performers of the year. It's killed everything. It's done a significant multiple on the S&P and many other things. And the one thing I'll say is actually coiling up, which is going to have a real catch-up moment, is when the miners, interestingly, we had this moderate pullback just on the coming into the close. It was about 0.4% there. And some of my favorite equities were down 4% on the downside, the miners, on account of silver ticking down. But they're not up the same beta for this move to the upside. In fact, some of them are not even at all-time highs. So we are storing up a coiling spring on the miners, the likes of Hecla, Coeur, you name it, First Majestic, Endeavor. There's a list of them. We've got upside setups that have got 10x multiples on them, and are looking really good. In fact, let's do First Majestic for you while we're on silver, because I don't always talk about miners with you. I've done a lot of the others on my channel, and I think I've mentioned Hector and some of the others with you more recently. But if we do this fella, which has actually been a bit held back, because Keith Neumeyer's main emphasis as someone who was in the investment banking space was actually, I want to accumulate. I'm scaling for the moment that I think will come. So he probably bought some projects that some would have conceived a little bit subpar for extraction and costs. Jared Canyon jumped straight to mind as some of those, and people would have thought, well, you bought something bad there that other people were prepared to unload. But if you take the macro view that I think he might deserve credit for taking, rather than as a miner and operating efficiency, he just said, listen, even a bad silver mine that's costly to get out, the silver becomes a very good mine when Francis starts bench pressing bigger amounts and in dollars. And we're getting that, same block of silver, bigger amount. It makes bad projects suddenly very good projects because they're priced at the margin, and they suddenly go from being barely profitable to substantially profitable when the prices move in his favor. So I think as a CEO, he had a slightly different mentality to miner operators who really just had lived a long, poor, lean cycle and super efficient. And that is good. Don't ever let anyone tell you that that's not good. But when you're coming into the wall that is the parabola that we're entering, you want all silver ounces, even ones that don't make sense today, will make sense in due course. Price fixes everything in terms of that. And for those of you wondering, so what's the call on it? This is an upside HVF structure using our draw tool. We do all of this in the community, and this is $145 on there. And that's not a close target. That is the first macro major target because this is the first move in an upward trend. So I would close.
What's the price today? What's the price today?
Price today, 15. So we're calling a 10x basically, just under. It was a 10x yesterday. Sorry, it's not a 10x anymore. It's a 9.75x. That's how things are. But we think that's going to be a very, very good move, and price will fix the fact that some of his mines that he acquired had high costs of extraction. And in due course, the fact that he has those silver ounces in the ground, and the valuations are going up as much as they are, certainly going to hold him in good stead. So I'll leave you with that as a miner as well on top of the silver. But happy $60 day to everyone watching this, and hit the like on Danny's channel because he's kept you alert and awake and watching the most important market and the best performing market of the year. So well done to you too, Dan.
Technical analysts tracking silver have noted a new pattern. Continuation structures forming one after another, signaling sustained upward pressure. These compact formations, instead of signaling exhaustion, reveal an aggressive appetite for accumulation. With spot prices climbing past the mid-$60 range, traders are already eyeing the next major resistance zones in the $90 area. These milestones mark the lower slopes of a far larger mountain, the psychologically explosive triple-digit barrier. While daily volatility will create sharp swings, the broader trend remains unmistakably upward. Analysts warn that once silver climbs past the mid-90s, momentum could accelerate dramatically as sidelined capital rushes in.
So you're going to get surges. There's going to be more surges. Is there any reason specifically today more so than any other day? I don't particularly see something, but people like to do what I call toe tagging, and they'll jump on so-and-so said something, and that's the reason why silver's gone. If silver's going to 333, it's going through 60 on the way, isn't it? And it's part and parcel. Interesting little tidbits to really get the silver guys a little bit motivated and pumped, because a lot of my messages sound very doomer, because I really just want to talk truth on this channel, hard, cold truth, even if it upsets people. But the one shining light is truth is this block of 100 ounces here, and price discovery is happening. And this makes me smile. And I've got more news for you on that. One thing I've been seeing, and this is coming off the newsreels a little bit, so I'm reporting secondhand, but there's actually been an outlier number of engagements in deep out of the money call activity for this February 2026. And I'm talking about strikes at $80 and $85. So that doesn't mean it's going to happen by February. And I'm not got the expiry dates when in February that is. But you could have the possibility holds that it could be, or certain people think that there's a risk of that sufficiently enough to want to hedge against that. So if you were a bank that maybe were structurally short silver in some way, you might hedge by doing that, by buying calls, or you just have speculators with real strong feel. Remember, these people have bought puts. Now, they would have been probably bought in the 50s that are expiring not far off. Basically, the year is done, aren't we? It's Christmas season right now, not many shoplifting days left, and then it's January and a little smidge of Feb. And some people are buying calls thinking, you know what, I either want that lottery ticket or I want to hedge against a position that's going to hurt me real bad if this thing gets disorderly. So that points to some information that there's extra normal volume there as well.
Oddly, while silver reaches new highs, many mining stocks have lagged behind. Companies like Hecla, First Majestic, and Endeavor have not mirrored the metal's performance, creating what many investors see as a rare disconnect. Historically, miners outperform silver during strong bull cycles because rising metal prices magnify operating profits. Yet several producers remain far below their historical highs, partly due to earlier low-price cycles, costly acquisitions, and operational restructuring. Analysts describe this delay as a compressed spring, suggesting that once sentiment turns, mining equities could experience rapid, multi-fold revaluations. Some forecasts even point to potential 8x to 10x moves as margins explode.
There are annual seasonalities, and all of those go for a ball when you're in fiat debt debasement convexity downside phase. And this is where we truly are. This is why these things are moving. First, why gold moved. Second, why silver. But silver has the additional aspect to it that I think they've run out of runway in terms of the above ground storage available for industrial use. And it's gone also that China has been accumulating gold aggressively, and in the more recent years has pivoted to getting its citizens to stack silver. So the price of gold is prohibitive for most everyday Chinese. They've been stacking silver, and you and I both know Eric. He's been sharing a couple of pictures of the guys down at the commodity exchange, tiny little Chinese ladies sitting on trolleys with the 16-kilo slabs, 7 deep and 10 across. And these guys are saying, here's how I say it. So with that kind of taking the physical out of the system that's gone on, probably driven out of the East, we are now getting true price discovery. And I want to add a bolt, an extra point on this. Someone reshared the chart since the 70s. I might be able to even find it. And it was showing that actually people who think this is new, that the gold and the silver has been moving east from the west. This cycle and these events have been planned for a very, very long time. The two charts, if you only bought the open of the US session and closed at the late versus buying at the Asian session, are diametrically opposed. In fact, I think if you had bought the US session only, you would have silver at 15 cents. And you would have on the Asian session silver at $330. And we actually sit with the hybrid of the two here at 60. So one side has been net selling throughout its time, and the other has been, and I'm frustrated that AI and algos are only really around now. I don't think there's enough time that we could set something to profit from that. But the point being, since the 70s, the precious metals been aggressively accumulated. People have known, we have all known, I've been speaking about this since I was an economic analyst of any variety, wearing much younger clothes. But the point was always when. They kept the control, it's always when. The disorderly part is now. And it's coinciding with the bankruptcy curve, Hemingway's bankruptcy curve. We're in the steep convexity part of fiat and debt debasement. You're also going to have the gold still doing famously well and getting into double digits of its own, in terms of thousands is what I mean there. So we'll all be bench pressing a lot more and getting pretty strong, at least financially, in the not too distant future.
First Majestic provides a striking case study of unconventional long-term positioning. While critics questioned its purchase of higher-cost projects, supporters argue the company was intentionally accumulating ounces in the ground ahead of a structural price reset. In low-price environments, these deposits appear inefficient, but when silver accelerates, once marginal mines become hugely profitable. As spot prices rise, previously unappealing ore grades suddenly deliver robust returns. Current technical models project potential targets far above today's valuations, with some estimates suggesting price levels near $140 for the stock's long-term upside drives. This approach reflects a broader belief in scarcity cycles. Owning resources matters more than short-term efficiency.
Well, the peculiar thing about America is that they've watched this whole game go down and they've known it go down, which is why I call it a controlled demolition. But now they can't be seen to be allowing themselves to be rugged by China. So there's sort of this last minute rush for everything. America apparently just swooped in and a day and a half before a European delegation was due to arrive to purchase rare earth minerals and just bought the lot, all of supply just before. So it's now like panic buying. It's like, hey, whoever wants to buy shit, get in front of them and pay over the odds and secure it. It's almost like last gasp panic buying. And, that's not the way you do it. The Chinese are patient. They've been playing the long game. And as I already mentioned, since the 70s, the pricing has always been bullish in the East, far more bullish, and always been sold down for them. The discount window sold down for them. And I've regularly used that phrase. The West is keeping the discount window open for China to acquire real money in lieu of it holding on and not dumping its trillion in treasuries, which is now worth 800 odd billion. And that's how they're being compensated for holding a very illiquid instrument, which many people don't realize. You can't get out of 100 billion treasuries, even though the market cap runs into near hundreds of trillions for treasuries. It's deeply illiquid, and in many instances, as a Californian teacher fund was shown, and as they found out in the previous banking crisis, the Californian banks that went bust, they were encouraged not to sell, but to take loans against their assets. And I think it was Signet, the bank, couldn't sell their treasuries. There just isn't the bid there. It's a rigged market. The only bubble, Danny, everybody needs to understand, because the BIS and the FT came out with articles, gold, silver is a bubble. The only bubble, and the BIS tried to tie the gold and silver to the stock market as a bubble, which is two different concepts in there, totally two different asset classes. The bubble is fiat and debt proliferation. Debt is just fiat with a delayed delivery date and a rental agreement tied to it. That's all. So it's fiat, it's proliferation of magic computer money, and there's a bubble of that. And the debasement has been huge. And that is why gold and silver will look to be disorderly climbing, that people will climb a wall of worry and say, when's the big pullback? No, no, no. We're in a parabola of issuance. Cayman Islands might have to buy all of the European and the UK's treasuries. I don't know if you saw that threat. I don't think it's a serious threat because of they wanting to war on in Europe. We're absolute Looney Tunes leaders. So, I mean, forget everything you see about bubbles on gold and silver. They don't bubble. Everything else bubbles and then collapses, and that's when gold appears to be disorderly moving. And that's what everyone needs to remember.
A major shift in the precious metals landscape comes from the growing divergence between Eastern and Western behavior. For decades, Asia quietly accumulated silver and gold during Western trading hours when prices were systematically pressured lower. Now, physical shortages, industrial demand, and retail stacking in China have intensified. Reports of citizens moving large bars from exchanges highlight a cultural pivot toward hard assets. Meanwhile, Western governments scramble to secure critical minerals, sometimes outbidding allies in last-minute purchases. Derivative markets reveal unusual spikes in far-out call options at $80 and $85, suggesting institutions are hedging against disorderly upside shocks in the near future.
there certainly seems to be an acceleration in the desire to conclude the controlled demolition of Europe. Everything Germany has done has been absolutely intentionally catastrophic. The leader is, of course, BlackRock, ex-employee, and like Starmer is visited regularly by your New World Order global president that you never voted for, Larry Finkelstein. It's Fink, I believe, but anyway, I have Tourette's. He's absolutely in charge and managing all of these guys, and there is a controlled demolition being pushed through in Europe, and it seems like they want to push ahead. And I've mentioned the United Kingdom in that with the UK. And there's also this rip, this transatlantic rip in the relationship. I don't have a dog in either fight. They're both doomed to die. The key element is I'm sorry for the citizens in both nations. I have family in both. But, you know, this is an orchestrated of intent. I mean, Germany are buying back fuel via India that's being refined in India. That is essentially Russian energy. And, you know, and paying a bunch more. And, you know, Porsche now are barely breaking even when they used to be a cash hemorrhaging manufacturer. It was one example. So this is controlled demolition. So yes, there's lots of puppetry confusing you about Europe and America. What you have to do is look at the collective West as an insanity bubble that is most ill-prepared for the re-rating of the fiat debt debasement situation, and thereby recognize you don't want to be part or parcel of any of it, and your best insurance is gold and silver in that. By the way, even choosing to live and see it out will see greater hardships because your government's going to come for you in the various ways that we've mentioned before, such as tax scavenge mode that we've shared with you, which is where they can no longer tax you via inflation. They come aggressively for you via direct taxation, exit taxes, unrealized capital gains, all of these things. So even as a precious metal stacker, you're going to be made to sell to pay excess extraction fees for the welfare state that's coming. Remember, most of your citizens aren't owning gold or silver on any meaningful scale, and many of them are using credit cards. Another little tap on the point we must bypass. The US just crossed 5 trillion in consumer credit, and a large part of that is going on daily staples and maintaining food and grocery budgets, going on high cost credit card debt. That doesn't end well. 5 trillion in that, Danny. You know, the consumer is more wrecked, I think, in America. The policies being led by government are more destructive in Europe. Who falls through the manhole first? It's a moot point, but America isn't the survivor in this. The BRICS nations, those that are actually purchasing, Russia's without a doubt a survivor in terms of its debt situation. China's a good survivor. It's not going to be a great environment for them when the consumer of the world suddenly stops buying because they've been crushed. Don't get me wrong. We're talking about a global depression for everyone, but there's going to be degrees. It's kind of like, you know, the earthquake, where you zone 1, 2, 3, 4, or 10. I'd rather be as far away as possible where the nukes are landing myself, just from the radiation. The people in zone 1 and 2 are being fried, and I'm afraid that's where we are. And that's the doomer part about the silver and the gold price moving up. These things don't happen unless there's real problems brewing.
Behind silver's rise is a deeper global story: escalating debt, weakening currencies, and geopolitical fragmentation. Western economies face unprecedented deficits and shrinking liquidity, while credit card debt in the U.S. surpasses $5 trillion, much of it used for everyday expenses. Europe confronts energy crises and industrial erosion, amplifying concerns about structural decline. As fiat systems strain, governments increasingly turn to taxation, capital controls, and financial repression. During such eras, gold and silver historically act as escape valves. The current surge isn't just speculative enthusiasm, it's a signal that the global monetary system is entering a high-stress phase where real assets reclaim dominance.